Hey traders, Chris Pulver here coming at you with a video for the 2020 watch list. This week was our first full week back in trading, no breaks. We're ending the week with non-farm payroll. What you're about to see is actually what I discussed with my trading room this week. We started with a clean slate, clean charts, did a brand new workspace, and I'm going to go through all these currency pairs and pick out really the best ones that I think offer the biggest opportunities, the most profit potential for 2020. Now, keep in mind, I really think that as we're coming off of historical lows in volatility, very low volume overall, things will change. There will be some major catalysts this year, whether it's the U.S. election, whether it's further escalations and tensions geopolitically with the U.S. and Middle East, the U.S. and China trade war, which we have phase 1 that's likely going to be signed next week, but phase 2 is probably not going to take any action until after the presidential election this year. So, of course, that's a question mark, whether the market takes that as uncertainty or we kind of have some optimism going into most of this year. The markets continue to shrug bad news off and continue to plug away, making new highs. There just seems to not be a lot to derail the markets at this time. We might see further developments at the end of the month in the Fed. We don't know. But like I said, this is going to be a lot of news-driven movements. I'm going to be trading, on my toes, but that's why I'm going to clean charts, higher time frames for a big 2020 watch list. So like I said, this is coming right out of my trading room. If you're out there and you're following me on social media, here's how you can find me on Instagram at pulver.chris. Twitter at PulverChris, and then Facebook, YouTube, just type in my name. That's what I look like. You can like videos like this and more. You can subscribe to my YouTube channel so videos like this will pop up and you can check out and see what we have. I'm also working on a new trading strategy video series, calling it Keep It Seriously Simple. Look for that in the coming weeks. I'll be releasing one video at a time to make sure everybody can digest it. So let's get into this 2020 watch list. So these are coming right from my analysis that we did in my trading room this week. I'll just start with the Aussie CAD. Some of them I'll go through relatively quickly if they're not big trades or big opportunities, but I want you all to see the charts. So taking a look here, this is just a weekly chart on the Aussie CAD. Big support sitting down here around 8,700. We've had a breach around 9,100 that continues to be support, and for right now, 9,150 to 9,200 is resistance. So on the Aussie CAD, here's what I'm looking at. It's just a really simple trend line. If we have outer trend line right here, and we have inner trend line right here, we're looking to see if there's enough support in this area, or perhaps we're going to come down to retest the lows or retest this larger structure before we have a reversal pattern and a balancing move. I'm interested to see if we can break this inner trend line and go to the outer trend line on the Aussie CAD. One thing that I think will help is any weakness in the dollar should help make the Aussie stronger. Also, any range-bound trading that continues on oil, which we actually saw that this week oil was up towards $64 to $65, and it is now closing below $60. So the range continues to hold true on oil. If oil is going to get softer and head down towards $54 or $51 where there's major support, then I would expect the CAD to get weaker and the Aussie to get a little bit stronger. So if we break this inner trend line, I'm expecting this to go to the outer trend line. I am paying attention to see where it ends up breaking. If this is a push down and then we break the trend line here, looking for a reversal pattern back up, we should see some wave cycles up towards this outer trend line. Looking left, of course, to find previous support and resistance levels, things like this. But I am looking to stay long on the Aussie CAD. Is this one of my top currency pairs for the year? No, but I'm currently long in live positions and I like the trade. Next is Aussie Swiss. This is one of my big trades for the year. Historical lows. Say no more. I mean, we had historical lows back here, and we had our Swiss National Bank deal in 2015. We had this low, which was a strong divergence low, and we came back to retest it. We also had a flash crash in January of 2019. We are sitting right here at historical lows. All I am looking for is a bottoming formation on this Aussie Swiss and expecting this to go very, very high. Now, is it going to be a fast mover? No. I was actually in this Aussie Swiss at the Swiss National Bank lows, and I waited for close to 6 months to get the profits up towards this high. Okay, so it can be a waiting game. It will be a slow currency pair. But given the fact that we're sitting at historical lows, in my opinion, there's no better way to be trading it. Buy it low and wait. Okay, and if it comes back to this trend line and breaks this trend line, just look to see how price cooperates on the right side of the trend line. I would love to see this get back to previous support, resistance, all the way up here towards 7,800. We're currently trading around 6,700. So there's a lot of upside potential, and this is one of my big trades for the year. Also, keep in mind that if the Aussie Swiss is going to go higher, then the Euro Aussie should be going lower. So keep that in mind with that inverse correlation. Yen pairs, here's what the chart looks like. I'm going to go ahead and skip it. I don't have really a big trade opportunity. I think the yen is going to be influenced by the stock market this year. Clearly, there's a ton of support, right? A lot of support right here. We have a nice trend line. We could be range bound going into the end of the year. If, let's say, the U.S. election is going to create a lot of optimism and a lot of great bullishness in the markets once again, and we start really stretching this greed and euphoria that the markets have seen for the last 10 years, look, we could have a very strong and very firm bottom in the yen pairs, and this thing could go bananas to the upside. It's a range. You know, I see major support right around 7,200. I see major resistance all the way up here at 8,800. We did see a similar move in 2016, right there. This was the U.S. election in 2016. Could we match that? Right? Could we match this, holding these lows, consolidating, and dealing with very little volatility, and then election comes in and boom, to the upside? It's very possible that we have something like that play out. I'm not holding my breath on yen pairs, but if this is a structure that plays out, support can hold, get on the right side of the trend line, and trade it bullish. If we have a giant drop below these support levels, this will be tricky. If we come down and break these lows, there's really not much stopping this decline until you look left way over here. So we could have a 1,000+ pip fall. We could have a 1,000+ pip rally. Right now, the structure really tells the tale. We have support. We had a little correction from August of last year up here. It's a fifth wave move to the upside. Watch the trend line. If it comes back down, expect there to be lower volatility and more consolidation heading into the election in November of this year. Okay, Aussie yen. Aussie New Zealand, another one of my favorites. Again, I'm loving these historical lows. Okay, we're sitting here near 103. We have lows around 1.00. I am buying this for a couple of big levels. I am buying this up towards 107, which is kind of an intermediate level off of a channel. So I am looking to play this long to 107. That's a conservative mark. If we end up coming in to create a beautiful bottom down here around 103, I'm going to try to hold this until we make a new high. This high right here is around 108.50. If we get to 10900 or even 110, I would be thrilled, because I'm building positions off of 105, 104, 103, and I've been leveling myself into these lower levels, and trying to buy it and hold it. So I know that it's going to take some time. This is also a slow-moving currency pair, but even if we come back down to these lows near parity at 1.00, I'm looking for lows to form and this pair to push higher. I'm looking for lows to form and this pair to push higher. So this is a great trade. I think we can make several thousand pips in this one. I made a lot of money on this one last year, fortunately, so I'm looking to do it again if it presents itself, and I think it will. Aussie dollar. Aussie dollar, this has been an interesting story for the last couple of years. Once we had a double top in the Aussie dollar, here's the top, here's the bottom. You measure this move, you double that move, and this double top formation has come to completion. That is also why I think we had the bottoms holding, and we had that flash crash holding. We have equal lows holding right around 6,800. Now, we also have this breaking. If I zoom in here, see if I can zoom in. That's about as much as it lets me take that in. We're looking at a trend line break, and I'm hoping this will stay on the right side of the trend line to come back towards 73 to 7,400. Now, equal highs around 74 to 7,500. I am looking just to stay long on this currency pair. This low is holding. This low is holding. We're on the right side of the trend line. We have been also in a large channel right here. That is breaking. If we are confirming this break, we should be going bullish. A weaker dollar is what I'm also forecasting for most of this year. I don't know what exactly is going to create it, but the technicals are so good for a weaker dollar. And with a weaker dollar, the Aussie will be a great benefactor from that. So just, again, holding the lows of support, getting on the right side of the trend line, coming back up. And I'm looking at a midpoint. I mean, I'd love to say that we're going to take this thing all the way back up to 8,000 or 8,100. But the reality is, even if it's halfway, even if we have this range and it's the halfway point, that still gets us to around 74 to 7,500. That's 500 or 600 pips off these lows. I mean, if we're sitting back down at lows at 6,800 and we go to 7,400, that's a 600 pip move that I would gladly take. And we can take that with, some trending systems. We can take that with some good structure. We can add more positions to it as it's going our way. So I really do like this currency pair with a weaker dollar on the horizon, and I'm going to continue to pay attention to this and looking for bottoming formations. I mean, right now we're on the right side of the trend line, right side of the channel, which is fantastic. If we end up going, maybe we have one more test of the lows. I don't know if that's going to be the case or not, but watching these lows, that's also a nice falling wedge. Getting on the right-hand side of this wedge should help this push to this recent high, which is, like I said, around 73 to 7,400. So at least I'm after that move on the Aussie dollar. CAD Swiss, this is another big trade opportunity, but only if it sets up. I'm only interested in buying the CAD Swiss at this level and this level. This is historical lows, by the way, right around 6,900. 70 is a very nice round number. If we come back to 7,200, I'm buying. 7,100, I'm buying. 7,000, I'm buying. 6,900, I'm buying. I will buy these lows and trade the range back towards 79 and very close to 8,000. So to me, this is nothing but a buy trade, but only buying it at good levels. I really hope that this can come all the way back down to this equal low right here. If we come back down towards this equal low, bring it on. Bring it down here. Go back up and trade the range from 72 to 76. Or better yet is maybe this is just this long channel. Let me go ahead and start that over. Maybe this is a long channel like this. And the structure just continues to hold and hold and hold and hold. And this pair becomes extremely boring. And then all of a sudden we have a giant move like this where it goes straight up. Or a giant move like this where it goes up. We just have this sharp bottom and then ends up shooting up to 76, or better yet, close to 8,000. So that is a buy trade only, but at those big support levels off of historical lows, that's a great trade. CAD Yen, not really too much to look at in this one. We still have some lows to the downside that price can get to. We have a little correction from last August through the end of the year. We do have an outer trend line that price seems to be gravitating towards. With the election in 2020, this one might be range bound. We might have highs here and lows here. This could just be a big range trade that we end up just going from lows to highs and then rejecting and then coming back down. So we might have some range bound trading. So not going to spend a ton of time in this one if I don't love it. And sometimes the yens just don't really jive with my style. Swiss yen, here's another big time frame. Again, possible range bound trade. So we have resistance, major resistance right around 118.00. If we end up drifting higher towards 118, that looks like a fantastic sell spot to take it all the way back down towards 104. Again, if it ends up coming into this level, we will certainly be talking about that selling point around 118. Otherwise, I will probably stay out of this one. This is also safe haven versus safe haven, so who knows what that's going to look like when currency pairs are getting risk on, risk off. Euro Aussie. A really nice structure on this one. Like I said, if the Aussie Swiss is going to go up, the Euro Aussie should be going down. So again, we have a large trend line, a large rising wedge. We're on the right side of that trend line and that wedge. We have a range right now that price continues to operate within. But if we end up breaking the lows, which is around 1.60, we did drift below those lows at the end of the year in 2019. To start out the year, we were like 59.50, and then we came all the way back up towards 6,300. So if we continue to range, that's fine. But what I'm looking for is a break below these lows, below 6,000, and then trending down. I'm hoping to complete a pattern here. You can see this in more detail in some of my weekly outlooks, but this high to low, lower high to lower low. I'm just looking for a move towards like 5,500, but it has to break below 6,000 first. And let it stay range bound, but look for that break below 6,000, and from there we can trend trade this for the next couple of months, hopefully. So that's a pretty good looking trade, but I do prefer Aussie Swiss, a little bit less volatility and also sitting at historical lows, so I'll stick with that one. Euro CAD, this is a pretty good trade in my opinion. This is a nice wave count we have since the highs in 2018. So we have 1, 2, 3, 4, 5, another 1, 2, 3, 4, 5. If we end up pushing this any lower, this gets us to around 4,200 at the very least. I like 4,200 how it sets up with some previous pockets. 4,200 and the round number at 4,000. I would much rather be a buyer off these levels and taking it to this outer trend line that might happen in a 1, 2, 3 wave move, 1, 2, 3 wave move. But I'm currently long. I mean, I'm long right now with these small positions, trying to get this back to a yearly pivot around 48.70. But if we come down to 4,200 or 4,000, I'll still buy it and just trade it based on structure. I really like this currency pair. Even though it's higher volatility, it tends to stay very, very balanced. So CAD Swiss, Euro CAD, again, those are inversely correlated. So what I'd like to see is for this pair to go up, we can make some money in the shorter term with the Euro CAD going higher. That would hopefully set the CAD Swiss in motion to the downside, that we can buy it at a lower price. And then we can end up selling this Euro CAD back down. So I still like CAD Swiss for the bigger trade, but I think Euro CAD right now, with all this consolidation, should allow this trade going back to the outer trend line. Or if we finish this fifth wave, we'll have a corrective move back towards the outer trend line. And that'll be fine. That might be worth 500 to 1,000 pips. Euro Swiss. This is another big opportunity. Again, looking at the fifth wave move, we have from the highs at 1.20 in 2018. I did take a nice short on this. This is a beautiful crown pattern, shorted it all the way down towards the 127. I have not been participating much in this other than buying it off of these lows. So I am in a little bit early. We haven't quite completed this fifth wave move, but I'm looking at 107 is a French election gap from 2017. 106 are equal lows from previous years in 2016. So between 107 and 106, I'm going to look to stay long. I'm currently long at this little cluster. I've been buying it. We had this, long run to the downside. I've been buying it over here, trying to get this back to previous support around 111. If it ends up finishing this fifth wave move to 107 or 106, I'm going to buy it again. And from there, even if it's a three-wave correction, get us back to 111, 111.50. We'll make some money on this one. Now, longer term, we could have this trade not only set up a three-wave move, but this might actually take out highs and give us a reversal pattern on the right side of this larger trend line. So keep in mind that because of this structure here on the Swiss National Bank in 2015, I would not be surprised to see the Euro Swiss come all the way back to 120. Now, it might not be this year. This might be something we have to wait a lot longer for, but you can see that this sets up patterns that have a destination. So if we end up setting up another channel like this or a falling wedge, what better opportunity than something like this? I mean, this is a falling wedge here. It jumps up and runs to 120. If we do the same thing and get on the right-hand side of all the structure, we can run to 120. So I'd love to be positioned for a trade at 10800 or 10700 and have this thing run back to 120. Now, whether I hold on to that the entire time remains to be seen, but I will certainly hold it from 108, 107, 106 back up towards 111, 111.50. I think that's a great trade. And having multiple positions, that's an easy way to grab a few thousand pips. So I do like this trade quite a bit. Euro Pound. Euro Pound, I see a big range. Right now, with kind of the uncertainty with whether or not we have more developments in Brexit, let's see if we can get a chance to sell this extremely high or buy this extremely low. I have a feeling for all of these pound pairs, the election that we saw in 2019, we are probably going to see, in this case, the lows retested, or on other currency pairs where the pound is the first currency pair, we'll probably see the highs retested. So what this looks like is we had this big move off of the December lows with exit polls at 5 p.m. making that big thrust to the downside on Euro Pound, and from there it started to retreat. So what I'm looking for is, can this low, if it's going to get retested, can we fail at that low and then go back up? Now this might just be a range trade, and we could trade this as a double bottom for right now. This fails off the low. We have a very tight stop area, and this goes back up into the midpoint of the range, or heck, comes all the way back up to the top of the range. If we are buying low, we've got a lot of opportunity to manage profit. If this comes all the way back up to tops, let's sell it, and let's take it all the way back down. So this could be range bound from roughly 8,200 to 9,200. Even though this is a very low volatility currency pair, we could have 1,000 pip range that we could certainly trade and make some decent profit on. So right now, watching to see, do the lows hold, and can we buy it low and make some money? If we can sell high, can we sell high and make some money? That's my plan on the Euro Pound. Euro Yen. Euro Yen, this is a structure, again, probably more of a wait and see. We have a corrective channel from August of last year pulling back. We have a trend line that's showing some resistance. If we look left on the chart, we have some really nice structure lows around 114. We may even come all the way back into this area at 138. Now, this is a lot of volatility. If we're sitting here around 121, falling 700 pips or rallying 1,000 pips, that's a lot of upside or downside. So in that sense, I don't really love the Euro Yen at this time. I think that the yen is going to be a pretty slippery pair to trade until we have more clarity out of the stock market or the US dollar or the election coming up later this year. So I'm very cautious moving forward on the yen pairs for right now. But again, keeping it clean on bigger time frames, we'll try to make some sense of this. If we are going into an election or into some major news catalyst at these lows, Well, if we bounce off those lows, then we have a lot of upside. If we break through these lows, then we stay with that trend. So it really can be a simple trade. We're just going to have to wait a little bit longer on these yen pairs. Next up is Euro New Zealand. Euro New Zealand, I see this as a big wedge. I would love to see this. We have a little channel going on right now. Currently, myself in the trading room is long. And the reason I'm long is we have a great daily harmonic pattern that is bullish. However, if we come from this low, which is historical low, by the way, back in 2015, if we shoot up and we end up coming back to retest this low, this would be a corrective pattern, channel, 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 channel. This might come down a little bit lower, looking for some wedge support. If it breaks that wedge support, I'm still looking for big bounces off these levels. Now, this may not be the euro that drives this move. This might be all about the Kiwi, and that's okay too. We've seen some great trends over the last several years on the New Zealand dollar. It tends to move in these long phases. We tend to see, 2 or 3 months at a time where the trend happens, and it's irrational, and that's fine. We can take advantage of that. So if I look at this from a historical standpoint, we're historical lows here, historical highs here. That's why I'm more interested in buying this extremely low. Right now, we're dealing with some consolidation. So I'm trading this inside the range for right now. If we end up breaking this wedge, this will be interesting. If we break this wedge, then we could be looking at some upside continuation. Now, I would prefer that we get a chance to trade this back down, or rather buy it from these lows to have a much longer run to the upside. But for right now, I'm currently long and just looking to range trade it. But if we get hit around 1.52 or 1.50, I will definitely be looking to buy and buy only. Euro dollar. Euro dollar, come on. This is like one of the best looking trades, but it's also one of the most frustrating. The dollar index and the euro dollar are tightly correlated. They're inversely correlated. So if you see the dollar index continuing to push higher, you're going to see the euro dollar continue to push lower. Now, here's what I think. And I mentioned this in several videos. We've been in this yearly channel for, it's been over a year. We've been in this channel. Look, if this is going to keep drifting lower, we have major support around 10500. So this might push down and push down and push down and push down and then finally make this rally that we expect. I think there's a couple of big levels I'm watching this year. If we break bullish above 112, I will be a buyer towards 116. We have to break above 112. Okay? If we stay in this range, then you're a range-bound trader. I am looking to buy this at 110, 109, 108. These are all small positions, and I will take this all the way down towards 105 as well, if needed. But off these levels, I am expecting a decent move against the dollar for dollar weakness, which should in turn help the euro dollar correct. Even if it's this level, it should be around 116. Okay, so I'm looking to build some positions to buy and take this up to 116 or higher. I hope that, again, it's not a matter of if it happens. I think it's a matter of when and how. But that's one of the big trades I'm looking at as well. I also want to be in it and be pretty aggressive. I'll probably have some robots picking up some trades for me as well. But I really like the trade. I love the structure. It's just, come on, man. This trade is driving me crazy. This is a big reason why the volatility has been so low in the markets. You're talking about daily trading ranges that are 40 to 50 pips a day, where just a couple of years ago, we were at 70, 80 pips a day. So there has been a dramatic slowdown in day-to-day volatility. But again, as we're sitting near those big lows in volatility with not a lot of movement, it might seem like it's a very boring market, but just wait, because that will change. And if you're not ready for that, you're going to be caught off guard. So be sure that we're staring at the bigger time frames. I hope we can get a nice buy position and take this euro dollar long. Pound pairs. Like I said, I'll be really quick on the pound pairs. This is a nice range-bound trade. We have the election high from December of 2019. If we come up to test that high and fail, I'm looking for that to sell off. This is a great channel. Sell the highs, sell the failure to take out the election high, and see if this can come back and retrace inside this channel. Pound CAD. I actually do like the pound CAD for a big opportunity, but it has to set up. You can see the range. Okay, we have election highs right here. We have really nice resistance. If we end up coming back up to retest the high, look for that failure and then sell that high. If we come all the way back down to this low or this low, guess what? We're going to buy it. So I'm selling high, I'm buying low, I'm staying out of the trade in between. It really just has to be sell high so we know where we're wrong, buy low, and we know where we're wrong. These are historical lows. This goes back to 2010. These are major structure levels. I could see a big range that we can trade, and we can make a lot of money in range trading. if that's what this is going to do for the next 6 months or even the next 12 months. That'd be a great trade. Pound Swiss. Pound Swiss to the upside. I do like this one for range potential all the way back up towards 1.50. Again, I want to see a setup. Off of these lows, which we have historical lows from 1.20, we have a really nice head and shoulders pattern. So if we are going to come back up to the neckline, give us this structure here, let's try to figure out how to trade the neckline. Let's try to figure out how to trade a right shoulder. Let's try to figure out how to trade a double bottom. But I'm focused on buying patterns on this pound Swiss to go up towards I'm looking at this yellow box as a 127, means we have a swing from low to high. We have a pullback, and I'm looking for a push into this 1.27 extension. So I'm looking for a three-wave move into this previous high. And again, range bound, that's about the halfway point. So that's a good level. If we get in around 126 or 125 and take it up towards 135, that's 1,000 pips. If we go from 120 to 150, that's 3,000 pips. So it's a big range opportunity that I would like to buy as low as possible. I do like that trade quite a bit. Pound yen, probably one of my least favorites. This is a complete toss-up. Now, we could be using this high in the election as a high in fact, and this would just end up coming back down. This is also a bit of a 50-50 trade. This could go up to range highs. This could come all the way back down to where we started. The yen is tricky. This is the range that I'm looking at. I probably won't be trading the pound yen that frequently unless it's very, very clear. At the same time, if we come back to these lows or these lows, I will certainly be looking for bottoming formations. Double bottom, look at that move. Fail to take out the low, look at that move. Okay, head and shoulders pattern over here, look at that. I mean, it does set up these fantastic patterns. Look at this pattern. When it sets up patterns, they're great to trade, but it could be range bound for most of this year. And again, I'd rather just buy low, sell high, and we'll let price come to us and we'll figure it out. Pound New Zealand. This is another one that's range bound. If we come back down to visit those lows or visit those highs, looking to sell high, looking to buy low. So range, we have levels around 205 and lows around 1.8. So it's about a 2,500 pip range. So can we sell high? Can we buy low? Stay with the range. That's a lot of pip opportunities, both directions. Pound dollar. This one with a weaker dollar on the horizon, I would like to see a big opportunity for us to buy this. We also have a nice trend line break. So if we end up coming back into this level, pull back into this green zone around 1.26 or 1.25, I'm looking for a move back up to 140. If we come all the way back down to lows, which is 1.20, we can buy those lows. We have a midway point in the range, or we can take it all the way up. So there's a lot of structure within the pound pairs trying to buy low, but I would prefer to be a buyer, take advantage of a weaker dollar, and hopefully a more stable pound if we can figure out some of this Brexit drama. New Zealand CAD, this one is a nice range. Sell high, buy low, stay within the range. New Zealand Swiss, this has some really good structure as well. Keep in mind that these lows are historical lows. If we end up using this channel, let's say that we come back up to this outer trend line and we push down one more time. Number one is we can sell this channel high. Number two is we can buy this channel low. And if we buy this channel low, by golly, we should hang on this for a long time, right? Look at that swing to the upside, that swing to the upside, that swing. Even though we didn't make it all the way, that's a big swing. From roughly 1.60 to 1.70, I mean, it's going to be a slow trade, but 1,000 pips of anything is a lot. And I would definitely take 1,000 pips on New Zealand Swiss off of historical lows because there's not much downside there. So I really like this trade. If it's going to be range bound, so be it. I would prefer to be a buyer so I can hold for positive rollover, but that's going to be leveling in around 1.60 to 1. Or actually 6,000. Sorry, there's no 1 there. 6,000 to 5,700. New Zealand yen. Looking left on this one, again, channel bound trading. We could go from channel resistance all the way back down here and then buy it again, sell it again, buy it again, sell it again. We could also have a bit of a surprise where this one holds the lows. Perhaps this is looking to hold lows and maybe come back up to highs. In order to get back up to this intermediate high that I have a line on, we have to break this structure. We have to break this channel and have the weaker JPY across the board. So I think if we're going to see a weaker Japanese yen, we will notice that across the board on baskets. You know, the JPY basket will be noticeably weaker and will be breaking channels and heading higher, and I think it's going to be range bound. That means dollar yen will probably go to levels like 114. New Zealand yen goes up to levels around 82 to 8,300. But it's just a channel for right now. New Zealand dollar, this hopefully is a really nice trade to the upside. 6,200 is fantastic support. and I'm looking for a head and shoulders. There is our neckline. If we can get a little bit of a pullback, I'm trying to get a right shoulder to set up and then take the break higher, taking this up towards 73 to 7,400. From there, I will sell it. Just trade the range. 6,200 support and 72, actually around 7,400 resistance. Okay, so a nice range trade, but again, planning on a weaker dollar to hit and allow us to make some money on that trade. Dollar CAD. This one, I'm really going to leave alone. We have a bit of a range. We have a very tight range, actually, from 133.50 to 13,000. It's range bound within a range, within a range, within a range, within a range. Super range bound trading. The dollar isn't really trending. Oil's not trending. Therefore, the dollar CAD is doing next to nothing. So I would go ahead and just leave this one alone for now. I'm sure there's going to be a big move on the horizon for this trade. I don't know what direction it's going to be. We could have weaker oil, weaker dollar, and we'll figure out how this one falls into place. Now, one could argue that we have wave 1, corrective wave 2, wave 3, corrective wave 4. This should be a fifth wave move to the downside. The problem is the fifth wave is usually the slowest. And man, if this is slow, then holy crap, this is going to take forever. So I'm not holding my breath to take this to the downside, especially if oil can't break. If oil doesn't get higher than $65 a barrel, then the CAD is probably not going to get that much stronger. So we either need to see very strong oil or a very weak dollar for this thing to go lower. Otherwise, I might be looking to do something else like this. That might hold the lows at 3,000, come all the way back up to these highs again, and then we end up selling it off of those highs back down to lows, and maybe we establish a range. I don't know yet, but I mean, we'll figure it out. That's what happens. That's why we spend a lot of time together in my trading room, is when trades develop and we see the evidence, then we look to trade it. Dollar Swiss. Dollar Swiss, a lot of range-bound levels. I am a buyer, but only at these big levels. Buying it, buying it, buying it, and just planning on it getting back to 102 eventually. So this also is a positive carry trade, which I like. We also have a nice inefficiency around 1.00. So if I buy it at 97, buy it at 95, buy it at 92, that's fine. I'll just hang on to this for, it's a small trade. It's a group trade. I work my way through the position, and I'll basically try to build a position, say, from 9,500 and trade it back to 1.00. So that's more of a, set it up, set the pending orders, buy it low, and then trade it back towards parity at 1.00, which has been hit tons and tons of times. And then lastly, we have the dollar yen. Dollar yen, you can see the big range. Are we going to continue to plug towards 114? We also have some resistance off of this level. You see that we have a high, lower high, lower high. Are we going to hit like 111 and then fall back down? Maybe. But we have range-bound conditions from 114 to 105. Major levels of support, 105. Major levels of support, 100. I could see us coming into 114, heading into the election and falling back down to 105. I could see us coming into 105, heading into the election and going up to 114. I don't know yet. Let's see where the yen is later this year. Let's see where the yen is in the next, 3 months. But I think we're going to be dealing with range-bound trades for now, and then look for a big driving catalyst in 2020 for the presidential election, just like we had back in 2016. I don't know if it's going to go the same direction. This big move in 2016 could be the complete opposite in 2020. We don't know yet. But I do know that that will open up the floodgates for volatility, and we will be jumping on whatever direction that is. Okay? So that's it. I mean, I wanted to take a few minutes. What's it been? About 30 minutes. So I appreciate everybody watching. It's a 2020 watch list. I want to have some more details on that. If you like this video, make sure you click on the like and subscribe to my YouTube channel. You can find me there. Again, Instagram, Twitter, Facebook, and YouTube. I'll post this video out there. Leave a like, leave a comment, subscribe, get videos like this and more. And I'll see you soon, everybody. Have a great 2020, and I'll see you in the trading room and see you in classes. Take care. Bye.